All right, welcome to another forex session. Now, this is a continuation from the previous lecture. Now, I told us a little about entry and the things we should consider before we trigger a trade. Now, I also want to talk about where to place your stop, and I will do that in these lectures, okay? But before that, I want to also show us multiple entry points in the same market, or will I say multiple entry points in the same price action movement. Now, this is the break of the structure. This is entry. Now, this could be your entry candle. This could be your entry candle. This could be your entry candle. If you enter from this candle, you are correct because it meets the requirement. Break of structure, retracement, break from the vertical resistance, retracement, and a candlestick with big body. This is a good entry. But let's assume that you miss this entry. This is also a good entry. This red arrow, also a good entry. Now, this is also a good entry. This candlestick is also a good entry. Now, I'll explain why. And this is why it's a good entry. There's a break of structure. I told us that your entry must be some kind of a break of structure and retracement. Now, this is a break of structure. Okay, this is a break of structure. This candlestick broke through this. If you go to a 30 minutes time frame, this will give you a clear retracement. Okay, let's try 15 minutes. It will give you a clear retracement. Okay. Now, you can see this is the point we're looking at. Break, you can see the retracement. 1, 2, 3. Now, these doji candles you are seeing here, these are retracement. These are retracement. Now, I will be talking about multiple time frame analysis in this course. There's another course for that, but I just want to make this point clear because I told us that we should wait for a level of retracement and not one candlestick retracement. If you check very well, you see there's 1, 2, 3, 4 candlestick retracement. Okay, now let's go back to time frame 30 minutes. Now, I just want us to understand entry. Okay, this is also another entry point. Okay, now if we want to enter into this market again, where can we say it's another entry point? You can see an impulse move. This is an impulse move. It's an impulse move. Now, this is a retracement. Retracement. Okay, now what you should be looking at is after a retracement, you wait for a break of structure. Okay, let's locate where the structure broke. As you can see, this candlestick broke out of this structure. This candlestick also broke out of this structure horizontally. Now, we saw the break of structure over here vertically, break horizontally. Now, this is where many traders will start entering. But I told us always wait for a logical retracement or a full price action retracement. And look at what the market is doing. The market came back to this structure. Now it broke there. Now look at the retracement. This is several candlesticks and retraced back to that same level. To that same level. Now, at the break of this structure again, now if you check, you see a level of break of structure vertically. Now, at the break of this structure, this is your entry. This is your entry candle. You can enter from this candle. Now, this is a good trading setup playing out already. You can enter from this candle. You can enter from this candle. They all met the requirement. Okay. Now, this is your entry, and your stop loss should be somewhere around this level. Somewhere around this level. It's a good place to put your stop. Somewhere around this level. It's a very good place to put your stop. Okay. And if you want to have a wider stop, then you have to reduce your lot size. Some traders will put their stops somewhere around this level. This is where some traders will put their stop around this level. Others will put their stop around this level. Now, if you are putting your stop in this first level, let's assume you want to use 0.02, for instance, to trade. Now, if you decide to have a wider stop, please reduce your lot size, maybe to 0.01, so that you will still be risking the same amount of your trading capital, even though you are using a wider stop. Okay, I have a video on this concept. I may not really cover all that here. Okay, you can check my video on trading psychology and risk management. Okay, but I just have to chip this in so that we can all be in one page. But what am I trying to say? We're talking about entry. Now, this is a good entry point for this market. It's a very good entry point. This is a very good bullish setup that has played that. If I was to be trading, I'm already in this market. Okay. Now, the market is doing a retracement, hopefully to somewhere around this level. That is why it's good to always have space between your entry and your stop loss level. So many traders will start putting their stop loss around this level. Please, it's not wise. You will be stopped at and the market will still go to your predicted location. Okay, so give your stop space to breathe. Now, you can check my video on psychology to know how to calculate your position size so that you know what side you use in order to risk a particular amount of your capital. Okay, you can check my video on trading psychology and risk management on that. Now, okay, I believe I've explained a lot of entry points in this market. We start with demo so that you can actually correct all errors before you move into a live account. Okay, so start with a demo account, practice this. Now we'll look at more entry points in this course, but I just want to give us a brief introduction on how we can get logical entry points. It's very simple. Okay, I'll repeat it again. Break of structure, retracement back to that structure or close to that structure in form of a chart pattern. The break of that structure is not your entry. You wait for what? For a candlestick with body or a candlestick with a obvious weak rejection. Then that is your entry. Okay. Now go back to your chart and practice this. And you can send me a mail if you have any confusion or there's something you didn't grab or you want me to make a video on a particular area for you in this space of forex. I'll gladly do that. Okay, I'll gladly do that. All right. Thank you very much. Happy trading. Bye. See you in the next lecture.